Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to the show, Hilliard.
Thanks for inviting me on.
Hilliard, the Canadian dollar, despite depressed oil prices over the past year, has hung in pretty well. Do you have any idea why it's at 76 cents?
I think the reason that the Canadian dollar is so firm against of course, it's always quoted against the U.S. dollar, right? So, and the U.S. dollar, Canadian dollar ratio is the one everybody watches. And the reason for that is because the Canadian Bank of Canada has refused to cut interest rates. They felt that the Canadian economy was strong and operating close to capacity, and in spite of some recent news that maybe it's not as strong as people thought, they've stuck to that. I think the Governor of Bank of Canada, Stephen Poloz, his 7-year term ends in a few months in the spring. He has been pretty firm on not cutting rates. I think it's the only central bank in the developed world of the G7 that hasn't cut rates aggressively recently. So that keeps interest rates higher, and it attracts the hot money into the country, which keeps the currency strong. So it would require a recession or something, or some significant weakness, I guess, beyond what we've seen so far, for the Canadian dollar to drop down. But I think in the next recession, we'll see below 70 cents for the Canadian dollar.
Well, also, Canada is an exporting country, at least in theory. Are they trying to drive down the dollar, or are they happy with a 75, 76 cent dollar? Is that about the right place for Canada?
Well, the two main exports are autos and auto parts in one category, and then the second category would be the petroleum exports, mostly diluted bitumen that goes to the U.S. And the arrangements for the bitumen I don't think it's very sensitive to the Canadian dollar. I think the prices are based on the U.S. dollar, and the Albertans have to absorb the differential. On the auto side, it could be more sensitive, but most of the cars, most of the manufacturing is moving more and more to the southern U.S. and Mexico, so it's not as big a deal as it used to be. So I don't think that if they did push the Canadian dollar lower, obviously it would probably help tourism, which in a way is an export. But as far as the two main products, I don't think it would make that much difference, and they haven't seen any sign that they're desperately doing that yet. If they cut interest rates, though, the Canadian dollar would drop probably quite quickly.
With Brexit now pretty well a done deal, with the massive election of the Conservatives in the UK, does Canada have to get a free trade deal done with Britain as soon as possible?
I don't think so. I think one of the things that's kind of amazing about this is the concern that without a trade deal, somehow the UK is going to be unable to trade at all. And really, when you look at the average tariffs that are paid with no trade deal, well, first of all, it reverts to the WTO rules, and the tariffs aren't that high and I forget the exact number, but it's not a surprisingly low number that applies if there's no agreement. So there's no sense of a panic there. And secondly, we just don't have that much trade with the United Kingdom. It's not our main. To give you some idea of the first of all, Canada is a very, big exporting nation. It's second probably only to Germany or China, those sort of in terms of the percentage of GDP. But unlike Germany and China, Canada's exports tend to just go to one country, the United States of America. So we're not that sensitive on having a deal with Europe or with the United Kingdom or wherever else we might be selling. We'd like to diversify to other places, but I guess you get a little bit lazy when you got the world's biggest consumer right on your doorstep. You might as well just sell to those people and not try too hard to break into other markets, because it's very difficult to break into new export markets. It takes you have to spend a lot of money. You have to get on the plane, go there, and then there's no guarantee you're ever going to get any orders. And then you have to jump through a whole bunch of hoops that they set up, and so it's easier just to sell to the North American free trade market.
Well, yeah, and considering Canada's relationship with the U.S., no matter who the president is, I remember Al Gore, when he was vice president, saying the U.S., Canada, and foreign nations agree on this. And I thought that really is how tight the two countries really are. And even if the leaders aren't getting along together, like Nixon and the senior Trudeau, because there are so many trade connections and even family connections across the border, I don't know, most people I know have relatives in the U.S. So, it really is, it's a pretty common country with just maybe some different attitudes.
Yeah, I think there's a lot of differences, but in terms of the economy, we're pretty closely linked to them, and that's not going to change. In fact, Canadian Gwyn Dwyer some years ago did a piece which I found to be very interesting. He talked about, as the U.S. is no longer, they still are the world leading power, but as the world kind of changes to where there's multiple regional powers, everybody's going to have to sign up with a bigger, stronger buddy for protection. And he said, for instance, I remember Russia and Europe will have to become one alliance, and of course Canada will have to go with the U.S. and a lot of people in Asia will have to go with China. So I think he had it down to 5 big groups in the world, and but there's no question Canada has to tuck itself under the wing of the big brother in the U.S. because they've got so much wealth and military power. And most of the time we get along pretty well. Recently it's been a little shaky, but for most of our history we've been able to get by without too many conflicts.
We'll have more with Hilliard MacBeth right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, Recycling Trade Publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, are there some cracks appearing in the Canadian economy? We had a huge spike in unemployment in November, 71,000 new claims, and also manufacturing was expected to stay about even, but it dropped. Are these hints that perhaps tougher times are ahead?
I think so. I think there's been a lot of hints. One of the things that I watch closely, given the story about housing and debt, is the household interest that people pay. So the debt service ratio, you might call it. And of course the banks have their, when you go for a loan, they say, okay, you can't exceed these certain thresholds, but somehow people find ways to pile on more and more debt, and now we're at a record high level of 15% of after-tax income. I believe it's after-tax income going to debt payments. And the most of that is the size of the debt. Since interest rates are so low right now, the mortgages are under 3%. So most of the reason that that's at a record high level is because just the magnitude of the debt is so much bigger than it was. And people just basically have no fear of taking on debt anymore. But at some point, what happens is people find that the paying the debts down or paying them back becomes the only thing that's the top priority. It becomes the only priority, and they have to delay buying other things like that second car or that Ski-Doo or that Sea-Doo or whatever. And at some point you get to that crisis, and I suspect we're pretty close to that. So you watch for signs of that, and of course on the other side of the coin, from the lender's side point of view, the lenders might get to the point where they say, "Hey, wait a minute, we've discovered that most of our customers are struggling to pay back with their loans," and they start to get worried, and they start to get a little tougher on the regulating the underwriting assessment as to whether people qualify for a loan. And in today's environment, it doesn't take much at all for the lenders to just make a small change. And this is why there's a huge lobbying effort now to get rid of the stress test. And in after the recent election and the new government taking over, a continuation of the previous government, the mandate letter the Department of Finance got, Morneau said that he should look at the stress test to make it more. I forget what the word is. I think it sounded like a word like flexible, but
I would say realistic. I mean, the stress test is assuming interest rates are going to go up, by quite a large percent. And in recent history, interest rates are either staying the same or going down. Why are you punishing people for a theory?
Yeah, no, it's true. And I think at the time when they brought the stress test in, there was a concern that interest rates were rising, and all of the central banks in the world were in the developed world were increasing their rates. And then about a year ago, so at the end of 2018, there was a huge stock market correction, and everybody got scared, including the Federal Reserve. And the Federal Reserve literally went from forecasting 3 rate increases to making 3 rate cuts in a very rapid succession. So maybe the stress test has outlived its usefulness, but I know that the CMHC head, Evan Siddell, he believes that the stress test is still a good idea because he's looking at it from the point of view of the mortgage insurer, and it's a government taxpayer-backed insurance company, and he's worried about the debt levels that people have gotten themselves into. Even if the interest rate were zero, if you have to pay back $1 million of debt and your family income is only $50,000, that's 20 years of putting all your debt repayment towards that debt, and obviously nobody can do that. And unfortunately, it's probably only a small percentage of the households, maybe 10% or something like that are in that situation. But it'll be very significant for those households, and it'll have an impact on all of us as they struggle to try and pay back that debt, or maybe they give up and declare personal bankruptcy. That's one of the things we've seen recently is a huge surge in the personal bankruptcy and consumer insolvency numbers. And surprisingly, even in Ontario, where the economy, the last place in Canada where the economy is still pretty good, and yet the year-over-year increase in people declaring insolvency was jumping by double digits. I think it was 20% or something like that.
And Wolf Richter from the Wolf Report on This Week in Money was telling us that in the U.S. the newest trend has been employed people making $100,000 a year are defaulting on subprime loans, like on the first payment. They don't even make it.
That's interesting because I talked to Doug Hoyce, who's the from Hoyes Mikolos Consumer Insolvency Trustee Agency, and they have about 24 locations throughout Ontario. And I met with him in June and did an interview, and he told me that a lot of the people that come in to see them to declare either bankruptcy or ask for a consumer debt proposal are regular people with good incomes and good jobs. But what happens is they're so close to the line on their amount of debt they have and the payments they have. All it takes just one small little thing to go wrong, and then the next thing you know, they're in to see the bankruptcy trustees, and they're more surprised than anybody. They can't believe how they got there. And he was, the myth that these are people that are kind of down and out and living on the street or something like that is just not true. It's regular people just like everybody else.
We'll have more with Hilliard MacBeth right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, with electric cars being mandated by so many governments around the world, there's going to be a huge demand for lithium-ion batteries. Do we have enough lithium to keep these cars rolling?
Lithium is a very plentiful mineral or salt or whatever what's categorized as. It occurs in lots of different places like Bolivia and Chile, and it's just a question of being able to mine it at a reasonable price. Because one of the big things with batteries is to get the cost down. But the supply of lithium is not their biggest problem. The biggest problem is as the battery is used and goes through a number of cycles, the battery loses its efficiency. So most of the research is based on trying to find the proper coatings for the cathode and the anode that would slow down that process of the battery losing its efficiency. And I haven't heard of any problems with sourcing lithium. Although I did read recently that the president of Bolivia, Evo Morales, who just got ousted, accused of election fraud, he was in the process of nationalizing the lithium production of the country. So I didn't read the whole article, but I thought that's interesting. So lithium's getting pretty hot if people are fighting over nationalizing it. But no, I think it's pretty plentiful. And I should add that the Canadians are at the forefront of the new technology in battery. Tesla has an agreement with a researcher, I believe he's in Halifax, Nova Scotia, that has allegedly made some breakthroughs in this area of finding the right chemicals and battery components to improve the efficiency and lower the cost. The cost has come down since I bought my first Tesla. The cost has come down quite substantially, more than 2/3, and they're looking at getting it lower. And if they can, it'll have a huge impact, because so far the adoption of electric cars is limited to some degree by the fact that the cheapest Tesla in Canada is probably still going to cost you close to $70,000. If they can get it down to $30,000 or $40,000, that opens up a huge number of people.
Now, taking a look to it at China, India, they have air quality problems. They want to get e-vehicles out there. But a study I saw said electric vehicles will maybe only reduce air pollution by 10% because you still have to generate the power for them. And a lot of these countries are still using coal to do that.
Yeah, so there's two things there. China is building coal-fired electricity plants faster than anybody in the world, and maybe India's close second. So that definitely works against the argument of electric cars to a degree. But even if all of the electricity were powered by coal-fired electricity, which isn't going to be the case because there's other sources like nuclear that China has, India has. But even if it were, there would still be a gain in efficiency in terms of the amount of energy that's consumed, because electric cars are quite a bit more efficient than gasoline-powered cars. The big loss with gasoline-powered cars is through the heat. So the combustion of the petroleum produces a lot of heat, and that's all wasted. There's no way to capture that heat back. But hopefully, eventually, and this may require that they rethink coal-fired. China is a world leader in solar and wind as well, so they're trying really hard to do it. But they just they need so much energy that they still have to build coal-fired plants. Some people think that nuclear would be the solution. There's no emissions at all from nuclear, and there's a new generation of nuclear power plants that is smaller and more efficient and perhaps safer as well. But I haven't seen any so far. I haven't seen any big move to start a huge development of nuclear power. Most of the gains so far have been offshore wind and solar.
Hilliard, thank you so much for chatting with us.
Nice to be talking to you.
My guest has been Hilliard MacBeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. His website, macbethgroup.com. If you have any questions for Hilliard or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.